Z for eminentwizard.com and marketwizards.com. It is 10th January, about 10 minutes after 10 IB, and we're trying to go over a little bit on two-day rotations. And again, the secret for understanding trading is understand these rotations within rotations, and that's something that we do very well. Reminder to use risk capital that you can afford to lose if you're playing this game. Okay, this is the E-widget, and I've set it up for a two-day range. So we know from yesterday's high, we took out the low and made a new low, and we've been chopping around in the lower level. So from this high to this low, we've got a range established. And obviously, if we use our terminology that we like to, we can label the bounces and see where we think they may or may not go based on laws of proportion. So my call for making sure you are paid by this 74 to 75 earlier was based on this understanding that that would be a 40 back bounce. And this will be a 50 back. And those mean percentages rounded off, and a 60 back. We call that a 4, 5, 6. And we never know if this low is going to hold for sure, and if we're going to get each and every one of these. Nobody knows. But we do know that we're range trading for now, and for the shorts to prevail and to prevent this from getting back into a more of a balanced position, they really need to defend this 74, these highs, because otherwise, if it's a third time through trade, more than likely we're going to get that half gap, which is going to be 76.5. That's the half gap. And this will start to approach that 78 area, which we have suggested may become a very important idea today. We already know that the 68.5 is important because it's yesterday's low. So any one of these ideas can work or fail. And over time, we're looking for the odds type ideas. So for now, the idea was get paid coming into 62, basis the overnight range and based on the angel, and based on approximately a 20-point range from that 82 high. And realistically, the burden is on the longs right now to punch back, get out of Dodge. And we said, first things first, let's test for support. It's a trend trade with yesterday's, but don't go crazy thinking we're just going to crash through. It's going to take time. So for now, the only thing we know is this is a range that probably need to understand is 74 to 60, which is about a 14-point range. And that's going to put this 68, 67 area here in the middle. And then all of a sudden, we'll get a news event or we'll get some kind of follow through, and it'll become much more obvious. But anytime we get this type of a trade that comes back in and we test, especially below the rain line first time back, you want to be very conservative about thinking that this is just going to come flying down. It takes time. And now we can see, again, that 63, 62 zone, the better be paid zone, and we get the snap right back. And there's a nice bounce, right? Almost a 10-point bounce. So longs and shorts are about balance in this first hour. And the 67, 68 area where the magnet is, this is going to be the determining factor in do we go up and get a slammer up, or do we just continue to range trade for a while? And the burden, obviously, because we're making lower highs, lower lows, the burden is on the longs to stop that from continuing as a pattern. Here's our 5-minute chart. You can see how we're so far below these other ideas that it's hard for this to just plunge. We could go over and under, but there's no real impetus to the downside yet. We're range type trading here. And if we go back and look at a faster chart like a 2, then it will give us a little bit better look for now. So that's why I like 2s and 3s and 1s in this type of an environment, because it gives us a heads up faster than that 5-minute chart. Range type trading still. And you can see that we're still way below our normal areas here. So I'm still reading this as much more neutral rather than we're crashing. Range type trading as suggested. And it's looking at all of these ideas that really helps, not just one of them. Range type trade for now as the market figures it out. And this is our half gap area up here. If the shorts cannot press and do any more damage by the end of IB, then I'm suspecting that we could start to make a little whack-a-mole. And in the meantime, if you've got your VIG already, 4 or 5 points per contract, that's the goal. And spread your trades out. After this hour, we'll take a look at a couple of charts. We'll construct them and help traders figure out that are using the e-widget how to set those up. Yes, I will record it down so you can see that later. Yeah, Brian, at any time, Mr. Trump can say something to set the markets off, or Powell or whomever. Typically, the S&P range trades more than it does breaks out or breaks down. That's why we try to get very good at understanding the rotations, because there's always some action. As long as you're prepared to risk to and make your 3 or 4 points, do it several times. Always have a game going that way.